I think we get right back to basics and keep it simple to start off with. And before you start making any plans about the future, have a good idea about where you are in the present. So you may have heard the term a balance sheet, or which basically is just understanding what is it you own, what is it you owe, and whether that's a positive number. So, assets and liabilities, lots of words that people use, but it's just, I own this, I owe that, what am I worth? And then the next thing to understand is, how much income do I get, and how much of that do I spend? And see if there's a positive number left at the end of that as well. So you're cash flow positive. Again, lots and lots of words that people can use, and you may think, what does cash flow positive mean? And it's just, let's just get it down to basics and talk in language that other people understand. Do I spend more than I earn? Do I own more than I owe? And when you understand that, you can begin to make some decisions about savings, spendings, investments, all of those things. An asset is something you own. It could be a house, which it houses you and keeps you dry and keeps you warm, but you can't take it down to the local supermarket and exchange it for goods. So then have other assets for that, maybe like savings accounts, which don't keep you warm. Well, they do if you pay the electricity bill. But you can take that and you can use that money. So different kind of income producing assets or capital assets like your house and your car.
And is a car really an asset? Because it just feels like my car just,
It's a depreciating asset.
Okay.
So there's another word. It's something that will reduce in value. Credit card debts, you've got mortgages, there might be a car loan, the car might be on lease, I don't know. There's lots of things that are debts. It may be that you've borrowed money from family or friends to help you get through the divorce period. Well, it's a debt and it's got to be paid back, so how are you going to structure that, because you don't want to lose your friendships. Perhaps sometimes forget is that, when I go home on a Friday, I'm going to pop into the DVD place and rent one of those, or something else, or the expenditure on hobbies, or the holiday, because this might happen in the winter. We're not thinking about a holiday until next summer, but it's got to be paid for.
So it's really making a list of all the things that are leaving your bank account, and then all the places where that money's coming back in. And then what does that tell you, the difference between that? So that the one is telling you that what you actually worth, your net worth.
And the other one tells you whether you're going to run into trouble or not very quickly. If you spend more than you receive, you're not going to be happy, not in the long run. That's when credit card debt begins to run up, and it runs out of control because plastic is so easy to spend. I know, I've done
it. Divorce really is an opportunity to almost take responsibility for financial situation. I think I found, I got a little bit lazy being married. It was kind of like, well, because I'm married, us as a team will work out a plan and we'll do something, and I'm sure he'll be, able to, almost feel like he's going to bail you out if anything kind of happens.
Yeah.
And this is a chance to really take back that control and take back the reins.
And you have to, because we go through economic cycles too, where in the good times we spend a little bit freely, and in the bad times sometimes we're a bit too slow to rein ourselves in, but we've got to, because all of a sudden we have to have our own austerity measures until the good times come again.